Your expectation was a little bit lower, actually, than the consensus at 1.5%. This is even below that.
Yeah, we certainly are disappointed with the number, and it's also important that the prior number is revised down fairly substantially at 0.4. It does look like most of the hole is going to be attributed to the consumption figures. You know, these are the annual revisions that come out in August, at the start of August, and essentially what we're now seeing is downward revisions in the service consumption component, which we tend to not get much source data from. Once a year when they do these revisions, sometimes they knock up that general trend and sometimes they knock it down, and obviously this time around they've lowered it, and so that's really going to lower the U.S. GDP trajectory, make the outlook going forward a little worse than it was before this morning's data.
What do you think is behind that, the consumption levels? I mean, is it food, fuel costs? What is it?
Well, you know what ends up happening with these service numbers is we have no reported source data. The market essentially waits until we get the monthly consumption data from income each month to find out what's happening with the service consumption trend. We pretty much have to take their word as gospel, and that number, of course, feeds the quarterly service consumption number. It's half of consumption. So even though we watch retail sales and analyze it with a fine-tooth comb, we really know nothing about this big chunk of the economy. And when they do these annual revisions, they're looking at cross-section surveys to figure out what's really happening. As you cited some of the main components and services, it's hard for them to gauge what the real activity is underlying the amount we spend on things like restaurant food and energy through utilities.